You're listening to Win-Win, an entrepreneurial community with your host, Ben Wolf.
Welcome to the Win-Win podcast. My name is Ben Wolf. We're going to learn from our guest today how to maximize profit with the labor efficiency ratio. And what the heck is that? Please subscribe, leave a review, follow whatever you're allowed to do on the platform on which you are listening to or watching this. Definitely will get it out to more people. So if you want the value here to go to more people, please do support the podcast by sharing it, subscribing, leaving a review, or following, liking, whatever you're allowed to do. With that, I want to get into introducing our guest today. He was the founder and CEO of Core Group, which is a certified profit-first professional, which provides fractional CFO, accounting, and wealth management services. You can find out more about them at coregroupus.com. And with that, I give you Christian Brim. Welcome, Christian.
Thank you, Ben.
Appreciate you coming on.
I know you woke up this morning wanting to talk about the labor efficiency ratio.
Yeah, labor efficiency ratio.
Forefront
it kept me up all
mind.
night.
Right.
What the heck is the labor efficiency ratio? I mean, so I guess the first thing I'd like to ask you is if you can give us a quick background. And for those watching on YouTube, but I know you have some of your daughter's art in the background, which is really cool. But like, what's a little background on yourself? Give us like a quick 2-minute history that kind of explains how you got to be talking about profit first and fractional CFO, labor efficiency ratio. Like, how did we get here? What's a little context where we can understand where this came from?
Yeah, that's a great question. So I showed up for my university tour, and they said, "Well, what do you like? What are you good at?" And I said, "Well, I like math." And they took me over to the School of Engineering, and I'm like, they're studying way too much. So they took me over to the College of Business, and then it's like, "Well, what do you want to study?" And I'm like, "I don't know. What's the hardest degree plan?" And so they stuck me in accounting. It's not like I never had any compelling desire to be an accountant. I went to work in public accounting. I went to work for one of my clients as a commercial banker, which I don't like to tell people that. And then at the ripe age of 27, I decided to start Core I actually bought a franchise and started that in 1997. But my compelling desire was to help business owners. My story and the stories that I saw were that the business owner success could be greatly augmented with sound financial advice, and it's really not, I've always said numbers are like a different language. It's not that you're good at math; it's that you know the language of business, which is accounting, and you're able to explain it in a way that people can use it. So the specific topic of labor efficiency ratio, I have learned from Greg Crabtree, author of Simple Numbers. Highly recommend that book. There's two. There's Simple Numbers and Simple Numbers 2.0 for anybody that is a business owner at any size, because it basically boils down all of these financial questions in a way that people can understand them. One of the most compelling parts of the book is this concept of a labor efficiency ratio that we're going to discuss today.
Okay, awesome. Okay, great context. So what the heck is a labor efficiency ratio, or the labor efficiency ratio? I don't even know the grammatically correct way to say that, but what is that?
So the labor efficiency ratio is essentially taking your gross profit and dividing it by various labor costs. The most common is your direct labor. So in most businesses, there is some costs. Even if you're a service business like ours, we have direct software costs, and so after deducting that from the revenue, that gives you your gross profit. Then taking all of the labor that is associated with producing that revenue. So all of our professional team, all of the benefits, all of the taxes. So it's a full in number, dividing that into the gross profit. and that gives you a number. Ideally, it's above 2. The target is different depending upon the industry, and of course, you want to be looking at that in a historical context and an industry context. But the concept is that if I spend X dollar on labor, I should receive Y dollars in gross profit. It's the inverse of thinking of it in terms of what's the percentage of my labor cost. So that's the more traditional way to look at it. You know, a restaurant might say, well, I need to keep my labor costs at 15% of revenue. But it flips it around, and it's an important nuance, because rather than looking at the labor as a outgoing source of cost, it is, are you managing that labor? Is that labor efficient in delivering the gross profit? So, you know, you can look at a business that, you know, in today's environment where hiring is an issue, you know, people are having trouble getting butts and seats. You look not at, well, golly, I've got all these open spaces and now I'm saving money. It's, no, you're missing out on this much in gross profit because you don't have those seats filled. So it's not a difficult concept. The 2.0 is a good benchmark for direct labor. If you have a high capital business like machinery, a manufacturing, or even like software and technology, your labor ratio may be much higher, like 3 or even higher. But
I'm still having a hard time getting my head around it. Maybe you could give like 1 or 2 examples from real companies, what they looked like, and then how that translated into labor efficiency ratio, and then like kind of what you learned from that, or what way you could kind of how to make that information actionable.
Sure. So when we started tracking it in our company, we were below 2. Okay. So just going through the rough calculation, you have $1 million in gross profit, and we had like 600,000 in labor costs. So that number is 1.8 or whatever it is. So we knew that we weren't getting as much out of our people as we could, or our industry peers were. And as a practical matter, when it came to looking at workflow, and there was a particular, we needed another bookkeeper, and the client service department kept saying, oh no, we've got to have another bookkeeper. And then we started looking at the numbers, and we're like, no, in fact you don't. We have enough capacity, because our labor efficiency ratio is not what it should be. It's not high enough. We don't need. And so we made the decision not to hire because our labor efficiency ratio was too low.
So that's actionable. Okay.
Right.
And so what was it that was making your utilization of, let's say, bookkeeping less efficient than it should have been?
Well, that's an interesting thing. So when you get into larger organizations or more complex organizations, and you're calculating that at a company level, it may hide some inefficiencies. Like, so, we've got multiple departments. It could be that, the bookkeepers do have a capacity issue. Like, they've got more work than they can handle. However, this department has excess capacity, because when you're looking at it at the 30,000 foot or the company level. And so you have to dig in and find out what the underlying issue was. In that case, with the bookkeepers, it was not a function of needing another person, but it was insightful to say, this is probably where our next hire needs to be. One of the other ways, so that's direct labor.
Okay, so maybe it wasn't bookkeeping, but like, so like we're trying to diagnose. So why was the labor force not as efficient as it could have been? You're saying because in some other department they were underutilized.
Correct. And so what we actually did was we restructured the organization and better allocated the work. So we created a new tax department where we took the tax work off of our client-facing people, so they could take on more clients, and then we moved the tax work over to a newly created tax department. We didn't hire anybody. We just shuffled chairs, reorganized, and all of a sudden we didn't have a capacity issue.
Right.
So
that's cool. That's cool.
Yeah.
And that's very actionable. Do you have another story or example?
Well, yeah, I one of the other ones that I think is specifically applicable to your listeners and the leadership is another. So that was the direct labor efficiency. There is another. You can apply that ratio however you want to, like by department. One of the more common one is a leadership labor efficiency ratio. So you're just looking at the leadership team and you're doing the same computation. You're dividing the gross profit by the leadership's team's cost. And that ratio, because it's much less directly involved with the production of that gross profit, is usually much higher, 8, 9, or 10. So in other words, if you hired a CFO for $250,000, you would expect somewhere between $2 million and $2.5 million in gross profit from that leadership hire. So as a company grows and looking at this fractional model that you have created, is that makes that a lot more palatable, because if I'm trying to come in here and
it's not gonna damage the labor efficiency ratio at the leadership level as much as a full-time hire. And if you don't have the gross profit to justify it.
Exactly. I can't hire somebody at $250,000 at a leadership team level and get that amount of gross profit very quickly out of them. It's going to take time. And so that's kind of the Greg Crabtree talks about the black hole of death that businesses go into, and it's the plateaus that every business gets to. They reach a certain size. It might be employee count, it might be revenue, and they stall. And it's because what they were doing that got them there is no longer effective. It's the law of diminishing return. You just can't get any more out of it. And so you have to do things differently. You have to do different things. And one of the black holes of death is between $2 and $3 million. That's where a lot of businesses go to die. And part of that problem is you need a leadership team to give you that advice, to give you that strategic insight, but you can't afford them. So I see the fractional leadership model as a way to incrementally bridge that gap to get to that next level, so that you have the profit to afford a full-time team member.
Right. Awesome. So what will happen? Like, I guess if people don't think about this labor efficiency ratio, for example, like what happens? Like, what are the negatives if someone's not thinking about this or utilizing it?
Well, I think what happens most of the time is they are reactive, and I think they tend to overhire rather than looking at their processes, their workflows.
Or like in your example, the way work is allocated.
The organization and structure as a whole, exactly. Or it could be like individual people, like you've got some, unproductive people. But I think there's a tendency when you're growing a business to forego profit. And it's very easy to justify, well, we're just putting this money back in the business and we'll get profit later. But what you do in those situations is you cover up those problems.
Mhm.
That was one of the things that happened in the pandemic when, a break was thrown on everything, is all of those problems became very obvious. You couldn't hide them anymore. And so there was a general retrenching and a lot of business failures. But growth is not a panacea. It does not substitute for good, rational, solid management.
Right. And how, and again, it sounds even to me like I'm not I always say like, that's why I went to law school, because I'm bad to stay away from math, but why, and numbers, but why, or I should say, like, for those who it seems like, oh God, it just seems like a black hole of death, just thinking about trying to figure out what a labor efficiency ratio is, or what ours is, or how to use it. Like, how does somebody who feels that way, like, I guess, utilize this tool, or I don't know, or find someone who could, who could, figure this out for them, hopefully not at a, for arm and a leg, but like, and then so they could get some actionable information out of it, because that's huge. I mean, if you go
Right.
ahead and, take on an extra $100,000 or $200,000 in fixed ongoing costs, because you are hiring and continuing to hire, over hiring, it's potentially a lot more expensive than whoever you might pay, a little bit to
Oh,
figure out that,
absolutely.
oh, I should not do this. The cause is somewhere else. Like, the cause for what I need is somewhere else. That's obviously could be saving hundreds of thousands of dollars. So, like, how do I figure out what this is and how to get actionable information from it?
Well, I think any financial professional is capable. I mean, it is a simple ratio of computing it.
So, like, I should ask my accountant. Like, I don't
You
know.
absolutely can. It's if they're not familiar with the concept, they can Google it, but it is simply gross profit divided by labor. The the question becomes tracking it and using it. So you're an EOS guy, you're a traction guy. It's got to be on your KPIs, your data metrics, on your dashboard for your leadership team. I mean, and it's got to.
Really, this labor efficiency ratio, you think it needs to be
Oh
not
yeah,
just in the
hundred
finance
percent.
department, like at the
No,
leadership team level,
absolutely,
this is a number
absolutely.
people need to be looking at.
Absolutely, and it's one of the ones that we have on ours. And you don't track it weekly; you track it monthly or quarterly even. It depends on how fast you're growing and how often you're considering hiring. But it's got to be. If you think about a business that is professional services, labor heavy, they're going to be an uptick. So your labor efficiency ratio will keep getting larger, and you're going to have to hire somebody, and it's going to then temporarily drop down. But it should stay within a range, right? And then as you continue to grow, the labor efficiency ratio will start to get higher. But the point of using it is that, like, if it doesn't get it can't go out of that range, it can't get below 2, because that means that we're not doing things well enough. Um, I think every business owner should have a CPA or a fractional CFO that they can have these conversations with. Um, one of the great tragedies of my industry is that all of our training at the university level is based upon compliance.
Mhm.
When you come out of university for accounting, it's, well, do you want to do tax or do you want to do audit? And both of those functions are historical, backwards looking, and they are they're essentially compliance. You're either compliance with the government or compliance with the financial markets, and so but that's not of value to a business owner. I mean,
Right.
it's got to be done,
Right.
but
So you don't get in trouble, but that's it.
right. And so our industry needs more people like me and Crabtree and that are going to help you take that data and use it. I think the most important thing a fractional CFO or a CPA that's acting as an advisor it can do for a company is, are the numbers aligning the numbers with the business plan. So, Ben says, I'm going to go out and I'm going to do this next 12 months with my business. Great. Do we know and can we show that the numbers reflect success or failure? Can we tell Ben, you know what? Those things that you are doing, you're on the right track. You're making the right decisions. Or, Ben, this isn't working. We can look into why it's not working, but the numbers are not proving out what you said you want to achieve. And to me, that's the most critical thing that can be done. I mean, because it kind of removes the bullshit factor that entrepreneurs and businesses have. It's like, I tell myself what I want to hear, and more sales will solve the problem, and we'll get there eventually, and blah blah blah. These are stories I've told myself, so I know it. But the numbers don't lie, and if you can have that person that you trust that is going to tell you the truth, to say, you know what, I don't know exactly why. I'm not going to tell you that you made the wrong decision. All I'm telling you is what you said should be happening isn't happening.
Mm-hmm. Right. Well, right. And that makes a lot of sense in terms of why it's going to be actionable. I mean, you've already told a couple of good stories. You have any other examples where, I don't know, I guess people have used this tool or where you've seen it with clients or used it with clients, and like what happened, like so people can get a concrete idea of what this means for them.
Yeah, I have a fractional leadership client that is they're a ad agency, a creative agency, and once they implemented the labor efficiency ratio, they realized, frankly, that they were overstaffed and they were trying to do too many things, serve too many different segments of the market. Is that whole thing? Well, if I'm going to provide video production, and I'm going to provide SEO services, and I'm going to provide social media marketing, I've got to have a contingent of people to deliver those services, right? But when they started looking at the labor efficiency ratio overall, they're like, well, we can't make money doing all of these things. It's just too big of a overhead. There's too many bodies.
Right.
And so they determined what segment they could make the most money in and could grow the most, where they saw the market need. And they basically fired a bunch of people and shrunk, which is always a difficult decision for an entrepreneur to make.
Yeah.
You work so hard to get to a certain level,
right?
And it's like, going backwards does not feel good. But it was necessary because, it gave them the foundation to scale and grow further. Sometimes it really is, you got to go backwards before you can go forwards.
Right. Right. Yeah, that is a great example. I guess just one last thing. I know you mentioned, or I mentioned in your introduction, that you guys are Profit First certified. Michalowicz, I don't know if I'm pronouncing that right. Michalowicz. Yes. Thank you. Got the wrong emphasis on the incorrect syllable. But the what is the Profit First model? And I guess just briefly, just so people have context, because I think you're the first Profit First certified person I've had on the podcast. So, like, basically, what is that? What is Profit First certification? And I don't know, just like, what is that for businesses?
Sure. So Mike Michalowicz is a serial entrepreneur. I met a few years ago, shortly after he wrote his book, Profit First. And it's a great read for any entrepreneur, because it's not just about profit first, but it's how he got to that point of figuring this out. But the basic elements of the book are that, his life experience is like a lot of entrepreneurs, where the profit comes at the end when you sell it. I'm not making any money. And then I sell the business and I get a pot full of money. And
So it's profit first. No, it doesn't have to be at the end. It could be,
and
on the journey too.
and so he went through a couple iterations of that and came to a very dark place personally and financially, and basically, the pain gets hard enough, you figure out an alternative. And he came up with this concept of profit first, wrote a book, and created a network of professionals to help deliver it. The concept is, I think, very simple. Again, I think great ideas usually are simple. If you think about back your Depression era generation, my grandparents, they used to have envelopes. And when they would get paid, they would take the cash and they would split it into envelopes. And this much was for groceries, and this much was for rent, and and that's how they managed their money. And that is the underlying premise of Profit First, is that we use multiple bank accounts to manage our cash flow. The benefit, I think the most powerful benefit of it is that you take the average business owner and you give them a financial statement and their eyes roll back in their head. They're like, I don't know what I'm looking at. Exactly. But Profit First meets them where they're at. So you look at your bank account frequently, I'm sure. So it's meeting the business owner where they are, using the tools that they're used to be using. It's not that we don't produce financial statements, and it's not that we don't use them for various things, but on a day-to-day business management standpoint, being able to look at your bank account and like, oh, I've got this much in profit, or I've got this much left to spend this month, is pretty powerful.
Right. Well, very interesting. Yeah, it definitely piqued my curiosity. Want to think more about this for a couple of my business, for my businesses as well. But I really appreciate you coming on, sharing about obviously the Profit First thing at the end, and this kind of mysterious term, labor efficiency ratio, and definitely showed me that it's not this esoteric thing that no big deal, right? It's and it connects to that Profit First thing you meant. It connects to the point you made at the end as well, that if you're not focused on the efficiency of your labor force, then it's really covering up for other things, whether it's processes, company structure, different things, and you're not dealing with those things. And you're just thinking that you're investing in your business, and really you're losing hundreds of thousands of dollars and not making a profit when you could be, with a little more intentionality. So yeah, I definitely find it to be very enlightening what you shared.
Well, good. I think as entrepreneurs, and if you think about this in your day-to-day, week-to-week, the vast majority of the decisions that you have to make are around your people. It's not around the vendors. It's not usually even around the marketing. The management of the business is managing the people.
Right.
That's what you do. And the labor efficiency tells you whether you're doing it well.
Right. At least on the efficiency standpoint. Yeah.
Right.
There's other ways that you could be not doing it well with
100%.
That's great. Anyway, really appreciate you coming on. Thank you for sharing this. Thank you for teaching us. Again, that's coregroupus.com. People can learn more about you, Christian, and really appreciate you coming on.
Thanks, Ben.
Thank you, and we'll see everybody else on the other side. Bye-bye.
You're listening to Win-Win, an entrepreneurial community with your host, Ben Wolf.